Hello to you. Welcome to another video of Day Trading 84. Today I will be discussing the historical phenomenon that is occurring in trading and investing. This is something that I will never forget. So in the video, I will be talking about how all of this started and which strategies these Wallstreetbets community members have been using to beat those big hedge fund shorters. Even if you are in crypto only, this is something worth watching because this historical event reminds me of how Bitcoin was born due to the financial mess that the bank created in 2007 to 2008. It would be nice to see that this event sparks decentralized stockbrokers that are not under the influence of big hedge funds or banks. For those who don't know me, I am a day trader. I trade in stocks, options, and crypto. But for some stocks and cryptos, I am a long-term holder. On this YouTube channel, I started a challenge on the 1st of December 2020 on how to earn a monthly dividend income of $3,000 with a starter's budget of $1,000. And every month, I invest $200 extra in this challenge. I hope to achieve this challenge by year's end. If you want to know how I do it, then give this video a thumbs up and subscribe to my channel. So how did all of this started? It started in June 2019 with this member from Wallstreetbets. I am calling this person his nickname Balls of Steel. In June, this member decided to buy call options GameStop with a strike price of $8. And the expiration date of this option was January 8, 2021. At the time, stock price of GameStop was $5. Balls of Steel felt that this company was undervalued. So he started to buy call options. In August 2019, he posted on Wallstreetbets Reddit the screenshot of his position in call options. He complained that Michael Burry, the guy from The Big Short, made the call options expensive. You can see in the screenshot that Balls of Steel had bought 1,000 options for around $53,000. In the description, I have a link where you can see all his posts. He posted monthly about his position. So you can see how his positions have changed over time. Sometimes his call options were worth a lot, and sometimes his options were down in value, like $30,000 to $40,000 minus. But he held on to the position and strongly believed in his research. He did sell some options for profit, but used those profits to buy other options with a different strike price and expiration dates. When the stock price of GameStop was in red, he bought more call options. If you are checking his posts, you will see that he often bought extra options for around $18, $20 per option, a classic example of buying low and sell high. Was he lucky? For the certain part, he was. But he knew how to take advantage of luck. There were occasions when GameStop grew hard in value in one day because of Michael Burry's announcements or something else. He took advantage by selling some of his profitable options and bought other call options for a lower price. That is a brilliant strategy for being a long-term value investor. He used the chart for calculating when to buy, when to sell, and when to re-enter. But remained bullish because of his fundamental analysis. This how he turned his $53,000 investment into $46 million. And it was not easy. He was being ridiculed for buying options in GameStop and for not taking profits. Because a lot of people thought GameStop was a deadbeat company and has no future. Now at the moment, big GameStop is way overvalued. But he still has some call options and owns shares of GameStop. Currently, he has $13.8 million in cash. I bet his fundamental analysis has changed now. But he remains bullish because there are external factors that could push the stock price of GameStop higher. Here is how the retail traders from Wallstreetbets and others that follow them beat the big hedge fund shorters. First, when Balls of Steel posted his position, a lot of people saw his profitable positions. And he didn't sell. It made people wondering why he didn't sell. So some started to do their own research, and some started to buy shares or call options. Back in June 2019, GameStop already faced a high percentage of stock that was being shorted. It was around 69%. But that percentage kept increasing to over more than 140%. How is this possible? The amount of shorters is ridiculously high. This means that there are not enough stocks to cover these shorts. For those who don't know what shorting a stock is, to explain it, let's say stock A has a current value of $10. But you think that stock A will drop down in value. So what you do is you borrow the stock from your broker and sell to the market for $10. When stock A is down in value by $7, you will buy it and give the stock back to your broker. And the $7 is then your profit. Back to the story. Because there weren't enough GameStop shares to cover the crazy amount of short selling. Some members in Wallstreetbets came up with buying as many stocks as possible and selling them later for higher prices back to these shorter. A lot of them bought call options as well. Because a call option gives you the right to buy shares for a pawn price agreement. So let's say you have bought a call option for GameStop with a strike price of $10 with an expiration date of January 29th. This means that you have the right to buy 100 shares of GameStop of the other party for $10 a stock. Suppose the other party doesn't have 100 stocks. Then they must buy 100 stock at the current price of $197 per stock. By exercising call options and buying GameStop, stocks create more scarcity. This is why GameStop has been growing crazy in value. But there is more to this. Since most of the shorters and market makers are big hedge funds, people decided to punish them for making the same mistake as in 2007 to 2008. Being overleveraged with no underlying assets. So non-investors and traders jumped on this frenzy to make a political statement. Screw these hedge funds, and let's make them bleed. Buy and hold on GameStop stocks. This historical phenomenon has made a lot of retail investors rich. But it's so crazy, if you are not an experienced trader, then don't get involved in this. Don't do options or shorting. But if you want to join the movement, then buy one stock or so. Because the stock price can collapse fast, but it can also be going sky high. Some who are into this movement already have made a good profit. They bought at a meager price of $3, $5. So they can take a hit. So far, the Wallstreetbets community has beaten two big hedge funds. Hedge fund Melvin Capital Management, which had suffered heavy losses by betting against video game retailer GameStop, has closed out the position and repositioned its portfolio. Citron Research was also stung by GameStop's meteoric rise. Citron boss Andrew Leff told Bloomberg he had covered most of his short position at a loss of 100%. The retail traders' battle against hedge fund shorters also exposed the weaknesses of financial clearinghouses, such as Apex. It takes 2 days for Apex to validate a trade. If they had the blockchain technology or worked with a crypto company such as VeChain, they could have validated the trades within minutes. With their outdated system, they forced brokers to stop allowing their customers to trade GameStop stocks by raising the deposit rates, which led to retail brokers stop their customers from trading GameStop shares. But the thing is, all brokers stopped retail traders from buying GameStop stocks. But hedge funds were still able to buy GameStop shares. Because retail traders couldn't buy GameStop shares, the price of GameStop shares dropped significantly. This way, hedge funds that were shorting stock could buy GME stocks cheaper to cover their short positions. So the whole situation reeks. Currently, the retail trading app Robinhood is facing 2 class action lawsuits. This will be a story for another video. The thing with Robinhood trading apps is that one of their shareholders and one of its biggest customers is Citadel. Citadel is a multinational hedge fund that has a big short position in GameStop. Currently, the Security and Exchange are investigating Robinhood to see if there are any malpractices and market manipulation. This Wallstreetbets saga is fascinating. This was the story that I wanted to share with you guys. I hope you like it. If so, give this video a like and subscribe to my channel for more updates. I wish you a good day and see you at the next video.